Hello, Maverick traders. Today is January 19th, and welcome to today's market recap. All right, so on the equity side, we see continued underperformance. Cryptos have outperformed. It's the third day of continued losses in equities. On the currency side, the Aussie and the Kiwi dollar are both weak and underperforming. Overall, the market is fearful of continued rate hikes. Okay, so taking a look at the S&P, we're truly in no man's land right now. We're trading right between both moving averages. I think tomorrow going into next week will give us a clear direction of where the market's going. My personal bias is lower. I think we're going to break below those moving averages, but we don't trade our opinions. We trade what we see on the charts. And right now, like I said, we're in no man's land. Over in the total world stock index, I called out this neckline in this inverse head and shoulders pattern last week, and we're still right there. I also think it's kind of make or break time in VT. We need to see whether we can pop above that neckline or not. If we can't, we are more than likely headed lower. Cryptocurrencies have outperformed, but now reaching extremely overbought conditions. You can see that the relative strength index is really in overbought territory. We're brushing up against technical resistance right there, as you can see on the red horizontal ray, and we're quite far away from both the 20 and 50 period moving averages. It is my expectation that cryptocurrencies will fall in line with the rest of the broader equity markets and start trading lower. In terms of the weekly outlook, I'm going to give this market a 0 just due to the fact that we are in between those moving averages for right now. And on the economic calendar, there is no news for tomorrow. So it'll be very interesting to see how the market will continue to digest some of the big news that we've had earlier this week. Now, in terms of currency analysis, on the cryptocurrency side, pretty much all the cryptos ended the day positively, with Ripple and Cardano outperforming on a relative basis. On the fiat currency side, we've got two obvious losers, the Australian dollar and the New Zealand dollar, and our three winners on a relative basis are the euro, the pound, and the Japanese yen. Taking a look at velocity, there are some clear trends here. I like the pound at a +2, and I love the idea of pairing the pound against either the Aussie, the Kiwi, or the Canadian dollar. I think the yen and the US dollar are risky propositions right now. So with that being said, let's take a look at TradingView and jump into some currency analysis and take a look at some possible trades. All right, so I've got the pound here. I really like the idea of pairing the pound from a velocity perspective against some of these underperforming currencies. Like I did say this earlier last week, I was targeting a little bit lower in the pound. I thought we'd target 145.90 in this basket, but we didn't get quite that low, and we've popped right up instead. I really like the upside in the pound here, and I love the idea of pairing the pound against the Canadian dollar because we've broken through support and are trending lower. I think this index could have quite some ways to go. I personally like the idea of having an intermediate target here from the September lows. In the basket, it comes in at 82.26. I also like the idea of targeting a weak Australian dollar. We've traded back into that resistance zone, rejected it, and my expectation is that we're now going to trade back towards support. So I mean, this low is obvious here, coming in around 75.40, but I like the secondary low as well at 79.98 or so. So either way, I do think there is room to short the Aussie dollar for a little bit longer. And the New Zealand dollar is not too much different, except we're in a consolidation pattern right now. If we can break below this bear flag, I really like the idea of looking lower in the Kiwi. In my initial target would be this gray support area in the basket, which comes in around 69.5. So there you have it. Those are the trades I'm looking at. I really like these trades provided the right chart pattern shows up on the price charts. Today's update is nice and short and sweet. We're really covering some ground quickly. I'm also a little bit ill, so please excuse my voice. So bottom line, frankly, the Aussie and the New Zealand dollar remain weak. The yen is at resistance. That means, in my opinion, the yen is a very risky proposition right now. It's far better, I think, to focus on what is weak, Aussie and the Kiwi. They both have some ways to go before they find more meaningful support, and the pound is a currency I really like. Sorry, my apologies. We're going to go back to TradingView for a moment because I do want to take a look at the euro as well. So the euro, the reason I like the pound better than the euro right now is that the euro is still in its own consolidation pattern. Now, this is kind of a triangular formation that's coming here. Provided we can break out the top end of that triangle, then I like the idea of looking higher in the euro. So that's just something I'd keep an eye on, but I think the pattern in the pound is much cleaner. This looks like a very nice pullback in a bull market. All right, so emphasis on position sizing. These markets are fairly volatile, especially in the Aussie and Kiwi dollar. You don't need a large position size to see significant gains here. And you also don't need a large position size, to see some sharp losses if the market does move against you. So just keep that in mind. When volatility is elevated, you can have big moves very, very quickly. So that's it from me, folks. Nice and short and sweet today, and I will see you guys next week. Take care, everybody. Happy trading, safe trading if you're trading tomorrow. See you next week. Take care.